I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up in the next hour, Elon Musk's plan to take Tesla private and the controversial delivery of the surprising announcement. Wall Street and Washington now have the same question for Elon: where's the money? Plus, Snap reporting its first ever drop in daily active users. What's the company doing to stay on the radar? And Google wants back in. In China, the search engine left the mainland in 2010 over Beijing's censorship rules, and now it is working with the Chinese government to do it all over again. But first to our top story. Elon Musk could be switching lanes. On Tuesday, the Tesla CEO sent shockwaves down Wall Street after tweeting that he is considering taking the company private at $420 a share. The board? Apparently not surprised. Tesla directors said they knew last week about Musk's bombshell proposal, but both the board and CEO have a long way to go to convince investors this idea is credible. Now Wall Street and Washington are asking the very same question: where is the money? Where is this funding? We caught up with Bloomberg Businessweek's Max Chafkin, who covers the company, along with Bloomberg's Ben Bain, who covers the Security and Exchange Commission. The question: did Musk's tweet violate SEC fair disclosure rules?
The SEC has been kind of clear that companies or individuals can make announcements about material non-public information through social media. So on its face, tweeting this out on Twitter isn't necessarily a violation. But the issue, as you talk to people, is really going to be about, to the extent that the SEC does decide to look into this, and we don't know that they will or are going to, is whether what he said is actually true. The tweet you pulled up, funding secured, that says, he's funding secured. And so people are gonna kind of be wondering, like, what does that actually, mean? And does he indeed have what that tweet indicates? He doubled down on it a few hours later on Tuesday, saying that indeed, he did have investors. So I guess we're gonna have to see how this plays out. But yeah, I mean, it's gonna really come down to, how sure was what he said at that time, and how much did it actually reflect what the reality was.
He did double down, saying, quote, investor support is confirmed, but we don't have any evidence from our sources or bankers close to the company that investor support is indeed confirmed. To your point that the SEC has decided that it's okay to disseminate information on social media this way. That dates back actually to a rule the SEC made back in 2013 in regards to Reed Hastings, the CEO of Netflix, who at the time announced some pretty important numbers on Facebook. The SEC decided that was okay. But to this point of funding, Max, what do we know about who could be supporting this, and if indeed they are?
So the universe of possible funders is pretty small. We're talking about sort of sovereign wealth funds, and of course the Saudis. The reports came out just before these tweets started that the Saudi Public Investment Fund had up to 5% in Tesla. So you could imagine a big sovereign wealth fund, a big tech sort of venture investor like SoftBank, or a big tech company like an Apple or a Google. In terms of like a traditional, normally this kind of deal will be like a leveraged buyout, but companies that are normally targets for leveraged buyouts have profits, and that's not something that Tesla has. So it would be more like trying to turn Tesla into something like Uber, basically a high potential private company with a very high valuation.
Meantime, this is a company, I have this chart in my GTV library showing Tesla's free cash flow. This is a company that has never made money and has been burning billions and billions of dollars worth of cash every year, essentially. Ben, what are your sources on the regulatory side saying about what happens next? What are they going to look into?
So look, I mean, this is, and this is maybe kind of to the point of why CEOs and corporate executives don't usually announce this kind of stuff on Twitter. This is like a long, deliberative process. So even if this were to move forward, we're talking months here of back and forth where Probably the board would have to form some kind of special committee to actually look at this. There's going to be lots of lawyers. There's going to be lots of back and forth. And don't forget, investors, who feel that this isn't the right deal could also take legal action. So what we're basically hearing right now is that we have to see how this is actually, gonna play out. The tack that Elon Musk ultimately takes here will go a long way in also determining how he's going to have to deal with Delaware state law too, because don't forget Tesla is a company that's registered in Delaware. So really, we're kind of trying to get a sense here of where this goes, and the funding question, I think, is really central to all of that. He says he has funding. Where is the funding going to come from, and what does that deal ultimately look like?
That was Bloomberg Businessweek's Max Chafkin and Bloomberg's Ben Bain. Meantime, Spacex has launched its 15th mission of the year. Elon Musk's other company successfully deployed an Indonesian satellite into orbit early on Tuesday. The reusable Falcon 9 rocket lifted off from Cape Canaveral in Florida. About 8 minutes after the launch, the rocket's first stage landed on a drone ship in the Atlantic Ocean. SpaceX is targeting about 30 total missions this year, up from a record 18 in 2017. Coming up, Snap's second quarter revenue was solid, but its daily active users are on the decline. Are Snap's best days behind it? We'll discuss next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. On Tuesday, Snap posted quarterly revenue gains that show it can compete in the mobile ad market dominated by Facebook and Google. The catch, Snap also reported its first ever decline in daily active users. That worries analysts who are looking for rapid growth. Yet, Snap did win the endorsement of a key investor. Saudi billionaire Prince Al-Walid bin Talal has taken a $250 million stake. So, has Snap hit a peak, or is this just a bump in the road? We spoke with Peter Stabler, senior analyst at Wells Fargo Securities, who's got a market perform rating on the stock, along with Techonomy CEO and our Bloomberg contributing editor, David Kirkpatrick.
It's not a great surprise. I mean, they've warned us that the changes they made to the app last year had caused some disruption. And so it's not a great surprise that we saw a little bit of softness. I think the question from here that investors are asking is, can they return to growth and over what time period? They've also been struggling with the Android platform. User experience on Android is somewhat inferior to the iOS, and they've been working on re-platforming the app for Android, and it's in test right now, and we'll see if that has the impact of growing Android users, or returning the growth to Android users, both in the US and globally. But as of now, they did slip sequentially, and now the big question is whether this trend continues.
Right, and David, this isn't something that we saw at Facebook in the early days or even Twitter. I mean, do you think Snap's best days could be behind it, given we're seeing a sequential decline fairly early in its life cycle?
Well, they have a problem that Facebook never really had, and to some extent Facebook tried to give to Twitter but never successfully gave them, which was they have a head-to-head competitor copying their every move, and that's Instagram. And that, I think, is slamming them. On the other hand, their ability to withstand that thus far, I think, is generally impressive, even though they did show this slight decline in daily active users. The fact that revenue is going up shows that advertisers, which is really the key constituency, are still pretty much happy.
So what about the revenue, Peter? We're seeing significant revenue growth. We're seeing that they are able to compete in a market where it's kind of a duopoly. What do you make of the fact that even though the user trends are not promising, the revenue is?
Revenue growth in the quarter was over 40%, and that's impressive. But when you dig a little deeper and you look at the regions, you see some trends that could signal some alarm. Revenue growth in the U.S. was 20%, and the question is whether that decelerates further. Revenue per user growth in the U.S. was only 12%, comparing to much higher growth in Europe and rest of world. So what investors are looking at is, how much more room do they have? Keep in mind that Snap's business in the US is only 3% the size of Facebook's, yet Facebook last quarter grew almost twice as fast. So really, you have a question here of what is the headroom on monetization per user, and is the actual design of the app an issue here, and is the demographic skew an issue here? That's what we think. That's our thesis, is that the youth skew of the Snap user presents a limiting factor on growth, and they have to expand the older users. And to David's comment earlier, Instagram is a key competitor, and they need more older users to open up the categories of advertisers that can spend significant sums on the platform.
Instagram is certainly a key competitor, also responsible for copying a lot of Snap's features and sometimes doing them better than Snap has. David, what do you think of that thesis, and whether Snap can actually succeed at getting older users?
Well, it's a tough challenge. I mean, they have done a good job with product innovation over time, even if every time they do anything it's copied by Instagram. They have been quite innovative. I wouldn't put it past them, because I think it's a well-managed, very creative company, that they might come up with some way to appeal to older people. But even the brand sort of just shouts teenagers and young people, so that to get older people to use it really would be more than even a product design change issue. It would be a branding issue, and it could turn off the younger people they still depend on. So that's challenging. The one thing, though, I don't think anybody should ever have any illusions. Snap is never going to be a scale of Facebook. It's a good company. It probably still has some potential growth, but don't think it is the next Facebook. It's never going to be.
Twitter CEO Jack Dorsey continues to defend Twitter's refusal to ban conspiracy monger Alex Jones. On Wednesday, Dorsey appeared on the Sean Hannity radio show to once again reaffirm his stance.
I think the first thing is that we, in the past, we did not communicate why we would take action on tweets or why we might suspend temporarily or permanently. We wouldn't communicate those reasons to the person who was suspended or tweets in question, and also the reporters. So simple communication within the product, but more broadly, we haven't done a great job at communicating our principles, the guidelines that help us make the decisions in the first place. So we're getting better and better step by step, but we have a lot more work to do there.
For reaction, we went to someone intimately familiar with the perils of online hate speech, Ellen Powell, who was the former interim CEO of Reddit. After she resigned from that role, she issued a post saying, "In my 8 months as Reddit's CEO, I've seen the good, the bad, and the ugly on Reddit. The good has been off-the-wall inspiring, and the ugly has made me doubt humanity." Before that, Powell was a partner at Kleiner Perkins, where she wanted the firm to invest in Twitter back in 2007. The company passed, but eventually invested in 2010, and Powell later sued the firm for gender discrimination. She lost that case, but has since become a vocal advocate for diversity and equality in tech, and is today the CEO of Project Include. We started with her reaction to Dorsey's defense.
It feels like he's standing on his own, and he really feels like he can change Twitter on his own without following what has happened in the past, without seeing what other platforms are experiencing, and without learning. So that's the piece that really surprises me. We've learned so much in the past 5 years, and he's not incorporating any of that, building any empathy for the people who are being harassed on his platform, and instead he believes there should still be this free-for-all on Twitter that he can somehow control and manage.
It also seems to reverse some of the progress that Twitter has actually made in the last 2 months.
It's confusing to me. It's a surprise that he would not take this opportunity to really protect people on his platform who are being harassed, and I've seen people leaving the platform, and I've not decided for sure that I'm going to leave, but I'm not tweeting. I haven't tweeted for a day, and I don't feel like participating anymore. You feel like you're contributing to this site that is allowing harassment, that is allowing these hate speech and the harassment that comes from it on the platform, and contributing to it if you're participating in it.
Now, despite the fact that Facebook, Google, Apple, Spotify have all taken action against Alex Jones, the app, InfoWars, is rocketing up on the app charts. It's more popular than CNN, the New York Times, even Fox News. Is all of this hubbub just helping him?
We'll see, right? The jury's still out, but at least the people at those companies can feel like they have at least stop their platforms from spreading it as much as possible. Apple, with keeping it on its platform, I'm not really sure. Google,
it's still in the App Store, but they took off some of his podcasts.
Yeah, you make it a little bit harder. You put some friction into it. It's better than doing nothing, which is what Jack is doing.
So Kara Swisher wrote a post about how rules won't save Twitter, values will. I mean, the rules, to be fair, have never been clear at Twitter, nor has how they enforce the rules. But forget about where you draw the line. Is there a different way to draw the line? How you draw the line? Could Twitter do that differently?
So I am empathetic to the problem because the rules can't address all the changing circumstances. So you have this clear rule, but people are trying to get around it, and you'll make mistakes, and it's always a problem. It never seems clear. But here, in this case, this is a person who is perpetuating harassment across the internet, and your product is being used as a tool for harassment. And these families who have had to go into hiding, like, where is your empathy for them? Is this what you want your platform to contribute to? I don't understand how you can keep this, encourage this type of information and encourage this use of your platform.
There's also the question of whether and how offline behavior should be considered. So Alex Jones, for example, could be potentially guilty of perpetuating violence against these families off the platform. How much should a platform like Twitter or Facebook consider that?
So we had this horrible experience at Reddit in 2013 in April where people were trying to figure out what was happening in the Boston Marathon bombing, and somebody incorrectly identified a student as the potential person who, the potential bomber, and that person was a missing person. His name was Sunil Tripathi, and his family got harassed. They said terrible things about him all over the internet. And what I took from that is that, no, you can't just look at what's going on your platform, and it doesn't matter what people's intents are. They're trying to, find the bomber. The frenzy that social media creates and the immediate actions that people take without thinking, and the immense harm that inflicts on individuals for no apparent reason, like that is something that you need to take into account. The fact that you're not the only reason doesn't mean that you're not a contributing factor, and doesn't mean that you abdicate all responsibility.
Given what you saw at Reddit and the choices you made, which were at times hard choices, if you were running Twitter right now, what would you do?
I would take that content off. I would really look hard at, offline and online. And I think Del Harvey sent out a message saying they are doing that. But
Del Harvey, who's running Trust and Safety
right now. And I think she's a very smart person. I think, this is your opportunity to really be transparent. Like, where are the rules? Where do you want people to behave, and where are you going to take people off the platform? And harassment should be one of the key things. This talk about free speech, when people like Lindy West, when Ta-Nehisi Coates, when others are coming off your platform because they don't feel like it's safe for them to share their ideas, and these are people who have resources, who are are out in the public eye in general, and they don't feel like your platform is safe for them, then where is the free speech? Where is the sharing of ideas? Where are these healthy conversational environments?
Coming up, we will take a closer look at Etsy's massive turnaround with CEO Josh Silverman. And later this hour, more staffing intrigue at Uber. The man who co-founded Auto Trucking with the scandal-scarred Anthony Lewandowski returns. This is Bloomberg. Since taking over as CEO last May, Josh Silverman has overseen an impressive turnaround at Etsy, with shares up over 300% in his tenure already. The company has managed to expand its business and eliminate areas that weren't growing, and now Etsy has raised its guidance for the year in its latest earnings results. CEO Josh Silverman joined us on the show.
I think we're at the very beginning of the opportunity for Etsy. When we look at our total addressable market, if you take just our top 6 categories in just our top 6 markets and look at only the online portion, it's a $155 billion market opportunity. So I think we're at just the beginning, and it's really about creating a better buying experience, which translates into more successful sales for our sellers.
No pressure, though the share price has increased considerably, up over 300% since you took over as CEO. Do you have any concern that investors are being too enthusiastic?
My job and the job of my team is to really focus on delivering results for all of our stakeholders, for our sellers and our buyers and our employees, and then our shareholders, of course, benefit as well. So, we're going to continue to deliver the best results we possibly can. And we're very focused on doing the fewest things we can exceptionally well. And we're seeing great gains from that. We think the results of the past few quarters have been encouraging, and we're looking forward to continuing to deliver more.
What areas are you exploring that may be new or unexpected?
I think that part of where we maybe lost our way was losing focus and trying to turn too quickly to too many new things. If you look at, let's just take 3 of our biggest categories: home furnishings, jewelry, and apparel. Each of those are multi-$100 billion categories where we have more than $500 million of sales today, but so much room to run. We've got to make it easier for buyers to find the products that they love and to buy those products and then to come back and buy more and more. And I know with over 2 million sellers selling over 50 million items that are beautiful, items that are made with care, there's so much opportunity to do better just in the core categories and the core markets we're in today.
The Supreme Court recently made a big decision that states can now force retailers to collect sales tax even without a physical presence there. That means more taxes for online shoppers. How does that impact Etsy, the business? How does that impact your buyers and your sellers?
It is not an existential threat to Etsy, but it does create more friction for our sellers. There's about 10,000 different tax jurisdictions in the United States alone, and each of those have different classifications for what types of goods are subject to what types of tax. That's very, very difficult for anyone to implement with excellence. So we think it's bad law, and we'll be working with the Congress and the state legislatures to try to come to something that is more effective and easier to implement. In the meantime, we'll have our sellers back, and we're investing in tools to reduce the burden and to make sure that we comply.
You also said at the time this decision was made that you'd continue to lobby Congress. What sort of actions have you taken?
So we are engaged in dialogue with Congress. And, the nice thing is that I don't think this is a partisan issue. We're trying to help states achieve their financial goals, but do it in a way where we can succeed, and most importantly, where e-commerce can succeed and innovation can succeed, because we think that's been a key driver of the U.S. economy. And, for us, we have 2 million sellers. 87% of them are women. They exist in 99% of the counties in the United States. Most of them are businesses of one running a global enterprise from their living room. So we think the needs of these micro entrepreneurs are really important, and we're making sure that their voice is heard.
That was Etsy CEO Josh Silverman from New York. Still ahead, Samsung unveils its priciest phone yet, hoping a larger screen will rejuvenate sales. But is it enough for the struggling flagship line? And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Samsung unveiled its Galaxy Note 9 this week at an event in Brooklyn, New York. The main takeaways: the phone will be faster and last longer without a recharge, and will also come with some automatic photo editing. But these changes come with a hefty price tag. The 6.4-inch screen Note 9 will start at $999.99, maxing out at $1,249.99, becoming at about $100 above the iPhone X's upper limit, one of the world's most expensive consumer phones. Samsung is banking on the larger screen device to rejuvenate sales of a struggling flagship line and fend off Apple's upcoming iPhones over the holidays. But will it work? Bloomberg Tech's Mark Gurman and Bob O'Donnell, Tech Analysis Research President, went to the Samsung unveiling in Brooklyn and joined us for a full report.
They're really positioning it as a huge leap forward, this new big thing for consumers, but the reality is what looks new is new to consumers, and this phone does not look much different than its predecessor, the Note 8. It has a slightly bigger screen, a much upgraded stylus, more storage capacity, a bit of a faster processor, but I don't think that's enough to move the needle to spur upgrades from the previous model.
Bob, you were there as well. Would you agree?
Well, generally, I would agree. The difference is, I would say, people aren't upgrading every year for any phones anymore. And so the market realities have changed, right? People are now upgrading every 2 years, every 2.5 years. So when you think it from that perspective, and you have people who have older Samsung phones, it's nice. But look, Mark's right. It's incremental at best. You know, the phone, or the pen technology is kind of interesting. There were more interesting announcements later in the event. And frankly, if you look at the time spent across the entire event, the time spent on the phone was actually relatively modest because it was a relatively modest upgrade.
Now, Mark, you've done some incredible reporting on the iPhones to come. How does what was revealed today compare to what you expect Apple to unveil in the fall?
Well, that's very kind of you. It's a team effort, but it fits right into what we were expecting from both Samsung and Apple this year. Not really significant upgrades. Apple's upgrade is not very significant in September on the feature side. It's significant in how many different versions of the iPhone X they're going to have now, different screen sizes, different pricing strategies. So it's really going to be an exercise in marketing, and I think that's the same thing going on with the Note 8 now, given it's not that big of a leap as well.
Look, Bob, there have been questions about whether customers are going to pay that $1,000 for the iPhone X. Same question here. Do people really want to pay that much for a Samsung phone?
Well, look, if Samsung has any Apple fanboy, fangirl equivalent, it's the Galaxy Note owners. They are the most dedicated, most faithful to the brand folks, and there are people in that group who want the best Android phone, and I think they will. And by the way, the 512 gigabyte model is actually going to be $1,249, so they're at an even higher price point there. So, but again, this is not the entire market. This is, and Samsung knows that, this is their dedicated Galaxy Note people, the people who like using the pen, which is why the primary focus of the new features were around the pen. And so from that perspective, it makes a lot of sense. But to me, what's more interesting, and Mark and I were chatting a little bit about this, is the Spotify news. To me, that was interesting because it reflects a bigger picture strategy story from Samsung across the board, across all their different devices.
And how does that, Mark, compare with Apple, which of course has Apple Music?
Yeah, no, that's a good question. So Spotify at a low level is not going very much in-house. They're not building up this new streaming music service themselves. They used to have one called Milk. I think they've had a few others over the years. They've sort of terminated all of those projects and now partnering with Spotify, which I think still has the top best brand recognition for any streaming music service. It's a smooth move by Samsung. And even Spotify investors seem pretty impressed by it. If you look at the Spotify stock, it's up several percent this morning just from this announcement.
Other product announcements: a revamped smartwatch, a home digital speaker. Mark, you've been tweeting about the size of this speaker, 1.5 times the size of the HomePod, which is already quite large. What's your take on these other products?
I mean, the Galaxy Watch is a revamped version of the smartwatch strategy they've already had for the past few years. I don't think it's going to move the needle. The market has truly become saturated at that $300 to $800 price point with the Apple Watch. Fitbit really has the sub $200 price point, so I'm not really sure where Samsung is going to fit in there. On the other hand, the home speaker, it's also coming in extraordinarily late, right? The Amazon Echo came out, 3-4 years ago, announced in 2014, so almost 5 years ago now. The HomePod was late as well, coming out in February earlier this year. But Amazon and Google Home really have a handle on that market, so I'm not really sure what percentage of the market Samsung is going to be able to grab with this device, especially with such few few details they're providing on this. I wouldn't be surprised if it's not released until the very end of this year, early 2019. So they're extraordinarily late to the game here on the Galaxy Home speaker, and it does not appear that they're bringing any new innovative functionality to the table that would inspire anyone to buy one of these things.
Bob, is it too late for Samsung and Apple in smart speakers?
Well, it's going to be very challenging. As Mark pointed out, you've already got a very strong position for both Amazon and Google. Look, the one thing I will say across the board for the different Galaxy products is we are seeing Samsung talk about Galaxy brand. It's interesting that they changed it to Galaxy Watch, and they call it Galaxy Home. They're trying to build this overall connected device story, which I think is a unique opportunity for Samsung, because when you think about all the appliances they make and all the other things they do, they're the only company in the world that potentially can do that. But again, the real test is going to be in the execution. How well does Bixby actually work on that speaker? Having Spotify bundled with a smart speaker, I do think is attractive, and that is a unique opportunity from them from a general music perspective. But look, it's going to be an uphill battle.
That was Bloomberg Tech's Mark Gurman and Bob O'Donnell of Technalysis. Coming up, Uber has seen a serious staffing shakeup in the last year, and now it's bringing back one of its former employees, but hopefully without the drama he left with. How Otto co-founder Leo Ron will fit back into the ride-hailing company next. This is Bloomberg. New York City Council dealt a huge political blow to Uber and other app-based car-for-hire companies this week. It approved a one-year industry-wide cap on new licenses and gave the city's Taxi and Limo Commission authority to set minimum pay standards for drivers. The passage of sweeping industry regulations signaled politicians changed attitudes toward the so-called gig economy and electronic car-hailing services like Uber, Lyft, and Via. And another day, another shakeup at Uber, but this time it's a former employee who is returning. Leo Ron, who co-founded Auto Trucking with his more infamous business partner, Anthony Lewandowski, will return to Uber and run the startup's trucking business, Uber Freight. Ron left Uber in March after Uber settled with Alphabet for $245 million over allegations it had stolen Alphabet's self-driving trade secrets. Now, Ron is returning to Uber after a months-long behind-the-scenes negotiation to rework the terms of the auto deal, announced almost exactly 2 years ago. We spoke with Lane Castleman, managing partner at Greenbrier, who used to be Uber's head of communications in the Americas, and also with us, Eric Newcomer, who covers all things Uber for Bloomberg.
What seems to have been happening is that behind the scenes there's been this renegotiations of the part of this auto acquisition 2 years ago so that Uber could really invest in Uber Freight, their sort of human trucking logistics business. And once those negotiations got settled with Anthony Lewandowski and Leo Ron, then sort of it cleared the way for Ron to come back now that he's sort of at peace with the company to sort of lead that effort.
But is he really at peace, Lane? I mean, is there a risk here bringing back someone who has some baggage?
I mean, I think there are a lot of people that have worked at Uber over the past 2 or 3 years who maybe are entertaining coming back now that there's new leadership in place that still have something to offer the company. But the reality is there's not a lot of people with expertise in this space. So Uber doesn't have a deep bench to pick from.
Let's talk a little bit about the bench, Eric, because we've seen the head of HR resign.
Right, Leanne Hornsey.
Yep. In the midst of an internal investigation into whether she was ignoring complaints from employees, a very high-profile woman at the company. What really happened there?
There's a lot we don't know. I mean, there was this investigation. There had been an internal whistleblower that had complained, and those correspondence came out. And, lawyers basically told the whistleblower there were some things that we could confirm, some things we can't. We're not going to tell you which. And their chief legal officer, basically said, trying sort of these issues in the court of public opinion isn't a great idea and that it can be unfair. But then ultimately, Leanne Hornsey sort of resigned right after an all-hands meeting. So it was very sudden and unexpected. So it sort of came amidst media scrutiny, but we don't know exactly what particular incident really convinced her to resign or Uber to sort of push in that direction.
Meantime, the COO that Dara Khosrowshahi brought in to help right the ship The New York Times had some reporting about some very off-color remarks he made in a meeting about an ad campaign featuring mixed-race couples. Along the lines of, how often do you really see mixed-race couples?
Yeah, I think the defense is sort of, analyzing the ad, trying to understand sort of whether the ad represented the people they were targeting. But clearly people in the room felt it was off color. We don't know sort of exactly what was said. He's certainly soul searching and trying to sort of get some leadership help around what exactly he should say. It was sort of a terrible moment for Uber to have, the turnaround crew basically sort of get hit with the same type of allegations that, Travis Kalanick and his leadership team sort of would have faced. Very hard for Dara Khosrowshahi, who sort of left a lot of the day-to-day leadership to Barney Harford. So you have this guy who's doing a lot of the heavy lifting, now is sort of emblematic of the behavior they were trying to leave in the past.
Now, Dara has made some other high-profile hires, like Tony West, the chief legal officer, hasn't made high-profile female hires, Lane, and also seems to be having trouble getting the ship in order. What do you make of it?
Well, I think it's not a question of if, but when. Dara's got a lot of work to do ahead of a hopeful IPO next year. I think he's going to look to the existing bench outside of the tech sector, right? So there's a lot of folks that are in corporate America who've proven themselves in various capacities, but he's got to convince them that this is the company that's okay to come to now, and he's got to bring them on board. That takes time. It's not overnight. He hasn't been in the job long enough to have completely built out a full leadership team.
I did speak with Tony West, and he said it was a long process making the decision to leave his comfortable job at Pepsi and join Uber. What are you hearing from people who work inside the company about whether there really has been a true culture shift?
Yeah, that's a great question, because I think the culture shift is being felt among the entire team. It's a huge company now, but the folks that have been there for a long time, 4 years plus, which is funny because in tech we say 4 years is a long time. Right. In the real world, it's not. The folks that have been there for more than 4 years feel like it's a new day. It's a new company with new leadership, and the problems of 4+ years ago are behind them, and they're excited and pretty bold about the future.
Eric, meantime, regulatory issues continue. Now in New York, we have the city council poised to approve a cap on licenses for Uber and other ride-sharing drivers, which would be a pretty
terrible for Uber. Terrible. I mean, I think old guard Uber, I'm curious what Lane thinks. I mean, Uber beat Bill de Blasio back and gave it all this room to grow. And obviously, it's sort of locked in some of those gains, but any sort of idea of a cap would be terrible for Uber, and then minimum guarantees on drivers would distort the marketplace. So from a business perspective, it's pretty shocking, and definitely sort of Travis Kalanick crowd sort of asking, did Dara invest in sort of the war room style fight with New York that they'd done? And I'm curious what you were sort of
How terrible, Lane?
Well, I mean, for
and
what?
Did Dara mess up here?
So there's a question about whether or not tech companies need to hire policy people, and this is definitely an example of the Full Employment Act for policy folks.
They have policy.
They have, yeah.
But I think most tech companies are going to need more, and this is why. Regulations always come back. Regulators are always looking for the easy way out, and in this case, this is the easy way out. Congestion pricing, actually changing the price of taxi medallions, helping the people that are most vulnerable in New York, those are big problems to solve. What's an easy one? Capping Uber.
Right.
That's something you can do with the stroke of a pen.
Now, got to ask you about one more story, because before you came on the show, you sold some of your Tesla shares before Elon tweeted that he was thinking about taking it private. You still have some shares.
I still do it. Maybe not enough.
You missed out on the bump, but what's your take on this as an investor?
Well, I'm hopeful that the news today means something big is happening, and that is good for my remaining stock. And on the other hand, I'm hoping I didn't really screw up this morning.
Just as an Uber reporter, it's funny, Uber preparing to go public next year, and now Tesla going private. It's just such a reversal, just two ships passing in the night.
And we still haven't quite determined how serious Elon Musk is about this, but Lane, does his capriciousness and unpredictability bother you?
I mean, one of the reasons I'm an investor in Tesla is because it is so exciting and unpredictable that you just have to get along for the ride.
That was Lane Castleman, managing partner at Greenbrier, and Bloomberg Tech's Eric Newcomer. Coming up, Google abandoned China in 2010, taking a moral stand against censorship. Now it wants back in on the world's second largest economy. But at what cost? We'll discuss next. This is Bloomberg. A semiconductor company that makes chips for iPhones says it was crippled this week by a cyber virus similar to last year's WannaCry ransomware. The outbreak at Taiwan Semiconductor shut several factories down just as the company was ramping up for the new iPhone. TSMC says full operations have resumed. It expects a 2% drop in revenue this quarter. Well, hot off the Intercept report that Google is secretly trying to get back into China with a censored search engine comes the news that it's working with Chinese companies on cloud offerings. Google is said to be working with Tencent and others to offer its cloud services in the world's second largest economy. Remember, it was just 8 years ago that Google abandoned mainland China because it refused to comply with Beijing censorship practices. So what's changed? To get to the bottom of that, we spoke with our Bloomberg opinion columnist Shira Ovide in New York, and from Washington, Bob Borsten, Senior Vice President at Albright Stonebridge. Before that, he spent 7 years as Google's Director of Public Policy and was on the original team that determined Google's entry into China back in 2006.
I think there are three factors at play here. First is economic. They see a market of 770 million plus internet users in China, and I think that's incredibly important to them. They want to be a player. The second thing that they have to look at, however, and now we go negative, is the political side of this. Already you're seeing senators here in Washington asking questions about why they're doing this, and also you're seeing a number of human rights groups taking exception. And finally, there's a moral question. And part of the reason that Google pulled out in 2009, 2010 was moral. And certainly nothing has changed on that front. In fact, Chinese internet regulations are now a lot harsher than they were back then.
Exactly. The laws are even more severe today than they were 8 years ago. Senator Marco Rubio did speak to Bloomberg Thursday about this very issue. Speaking of the reaction from lawmakers, take a listen.
I'm not concerned about it. I'm outraged by it. But here they are. Number one, they won't work for the Department of Defense because they don't want to be involved in killing people. But on the other hand, they work closely with a university in China that provides all of the technology for the Chinese military. And then here they are in the United States talking about how they stand for free speech and all sorts of things. But they're prepared to go into China and help the Chinese government censor information and deny people access to information. So it's hypocrisy. It's sickening.
Shira, you have an excellent piece weighing the pros and cons, mostly the cons of this. Talk to us about at what cost this would come to Google. First of all, there's user trust. And second, you point out that does Google actually even have a potential to break back into the market at all, given the dominance of the Chinese services that are there already?
Yeah, it does seem on the commercial front that China has kind of moved on without Google, for better or for worse. And look, it's for people like me who want the world to come closer together. The internet was supposed to help make that happen, and instead I think what we've seen over the last few years is not just in China but in other countries around the world where the government has used the internet as a tool to make the world a more closed place, to crack down on global information, to censor, to shut down dissent. And that's certainly what we've seen in China to a large extent without Google being there. And now, of course, they're trying to make these compromises to potentially come back.
So, Bob, the economic potential is obvious, 722 million internet users in China. But on the moral side, wasn't it Larry Page and Sergey Brin who personally decided to pull out in the first place? They're still at the company. What's different now? You know, why has the moral calculation actually changed?
Well, that's a very good question. I can't answer that one. But Sergey certainly at that point argued that he did not like the authoritarian, totalitarian nature of the regime. He had come from the Soviet Union with his parents, so he clearly took a personal offense to what was going on. Also, the Chinese had essentially invaded Google's search engine, and that did not make anyone there happy. What's changed? It's only gotten worse as far as I can tell.
So, Shira, talk to us all about the political atmosphere here. This would certainly not be something that I imagine President Trump would be pleased about as he is waging a trade war on China.
Yeah, the politics are interesting. You know, you had that clip from Senator Rubio, and I think he's been very clear on how is it that Google, on the one hand, can refuse to do work with the U.S. Department of Defense on this military drone project. On the other hand, it's willing to kind of help the Chinese government censor information from its own citizens. That's a little bit of a hard sell in some corners of Congress. And yeah, the politics are going to be very interesting, that given the trade tensions, or trade and beyond tensions between the United States and China now, it's not even clear to me that Google would be permitted by the Chinese government to re-enter the country with search or with its other commercial services.
Well, that's certainly another question. Bob?
No, I would agree with that. And I think one of the things we have to look at very closely here is uncertainty, both in terms of what the Chinese government will allow and in terms of what Google wants to do. People are treating this as a done deal, and it's by no means a done deal. But the fact that just a beginning of a story about this has outraged so many should be taken as a pretty serious thing by Google.
It's anything but a done deal, Bob. You're right. It also sets the standard potentially for, a country-specific internet. And whenever we ask Alibaba or Tencent or Baidu executives about censorship that they all abide to, they say they're just following the law in their home country. Google could certainly say the same thing. But if this happened, what are the standards it would set for other companies like Facebook, for example, which is still blocked in China? I mean, could you see a domino effect, going against, freedom of access to information?
Well, I would argue that Facebook will never get into China. And the reason for that is that its fundamental utility is as an organizing tool. It allows people to organize. And that's the last thing that the Chinese government wants its people to have. Google is in a different place here than Facebook is. There are already plenty of search engines over there. And one of the big questions the company has to look at is it worth it economically? When Baidu, the chief competition, already has about 75% of the search market.
Now, Shira, in her piece, reminds us of a hack attack that originated in China in 2006 on Google, where the hackers were trying to access human rights activists' information. Bob, what was it like being on the inside of that?
Well, I wasn't there for that exact attack, but it's definitely one of those things you worry about a lot ever since something called the She Tao case. She Tao was a dissident. Yahoo had a partnership and had to turn over data on that dissident to the Chinese government. Once they did, the Chinese put him on trial and put him in jail for 10 years. Now, any company that's operating in China, their data is fair game for the Chinese government. And if so, they could be seen as, and in reality, complicitous with that government. That's nothing that most companies want to have on their hands.
That was Bob Borston of Albright Stonebridge and Bloomberg's Shira Ovide. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.